Yeah, we're live streaming Be the Bank. Excellent. So the process of identifying your risk tolerance and the level of security that you want in your lending is going to be pivotal for you in the beginning. And it's going to be pivotal to redo every 6 months, or maybe pivotal to do every year. As money comes back in, before you relend it, you want to look at it and say, okay, what do I want this money to do? Do I really need this money to double itself for the next 2 months or 3 months? Or am I willing to hold that longer time period and keep my money, right? Am I willing to risk everything to double is the question, or am I willing to wait and be more patient, but guarantee myself a return? So if you put 100,000 out there and you get 12% back, it's safe, right? You get that 12%, it's guaranteed. That's a good return for a safe investor. If you take 100,000 and in 3 months it doubles and you get 200,000 back, you look like a genius. And if that same exact deal goes sideways and you only get 50,000 back and you end up in a lawsuit, now you feel like an idiot. Hands to camera if you recognize the risks of equity and the positives of equity. There's both sides of this. Same with high risk loans. Your balance should never be at risk unless you're playing with gambling money. Unless you're playing with gambling money. And we'll do a little exercise for everybody on the call. I want you to write down, this is personal for you. You don't have to put it in the chat. This is just your thing. Write down the amount of money you have. Write down your free cash, not your net worth. This isn't full net worth. It's just free cash. So write down a piece of paper and look at that free cash. And then I want you to multiply it by 10. So 0.10. That's basically going to give you 10% of what your free cash is. So if we're looking at someone with $100,000 free cash, 10% of that is $10,000. You could associate 10,000 to a high risk loan. Like $10,000 could go to a high risk loan. That could go to an equity play. That could go to those micro loans. But that 90,000 really should be put into something longer term, a more stable asset, maybe something with a second position or even better first position, except 100,000 is going to be hard to get on a first position unless you're doing deals out in the Midwest. If you're doing deals where people are buying house for 30,000, 50,000, 60,000, 100,000, no problem. You could be first position on one of those deals. Chance to camp to recognize numbers matter. How much the total project value is will matter. Yes. So there you go. Kim's got the money up. We got the prop money. So as you're building your valuation, now you've got 10% to risk, and we'll say the other 90% is to maintain. It's to grow consistently. That money you could expect anywhere between an 8 to 12%, 8 to 14% actually, plus a 2% points. Hands to camera if you commit to charging points, even if it was your family, even if it was your mother, you charge points. All right, well, I got some of you on that one. Here's the deal. If you can't charge your family, then I don't know that you should be a lender. If you wouldn't feel comfortable charging your family points, if you wouldn't feel comfortable charging your family interest, you might not have what it takes to be a lender. You got to be kind of thick-skinned in this business. They're dealing with your money, hard-worked money, hard-earned money you saved up, money you did well in an investment, and now you got an opportunity to put it back to work. Money that you spent some time doing something right. You want to do something right again with it. And if family can't understand that there has to be a return on investment, don't lend to them. Hands to camera if that makes sense. And if a borrower doesn't see the value in your money, if a borrower doesn't see the value that you're bringing to them, they're probably not making enough from the deal. Don't lend to them. That being said, higher dollar amounts, when you get to 400,000, even $250,000, you're lending at $250,000 or you're lending at $500,000, interest rates may come down as you build a relationship with the lender, a borrower. As you build a relationship with that borrower, you may say, you know what, this person's done really well for me in the past. Maybe I'll give them a discount so they don't go to somebody else. I like that stable kind of return. And we've had plenty of people have that opportunity. We do it with our tenants. If a tenant's really good, maybe I don't raise the rent as much as everybody else. It's the same thing with a borrower who's been successful. These people are hard to find. These people are really hard to find. Success, like borrowers who are consistent, who always make payments, who do a great job with their projects and prioritize their lender, they're difficult to find. You want to make sure that once you do find them, you keep that relationship. Hands cam if you heard that before. Lenders dropping their price because they've done a deal with you before. Yes. Who's sort of lenders charging more because they've never done a deal with you before? Yeah, of course. Write that down. I don't know. Some people might miss that. Write that down. I've never done a deal with them. They don't get the family price. If I've done a deal with them, they get the family discount. That's okay. If they did well, they didn't treat me well. Look, sorry, like that's still high risk to me. In fact, if somebody doesn't treat you well, don't lend to them again. If they don't treat you well, man, it doesn't get better. It doesn't get better. It can only get worse. So a portfolio evaluation, we'll say you're playing with $100,000. 90% of that, roll it into an asset that you know is going to minimum get you back. It's a double within 5 years. The rule is 72. That means a 12% return. So if you can get your money doubled in 5 years on 90%, that's good for lending. I want to talk for a moment why you may not be prepared to lend. If you're not sitting on, we'll say 100 or $250,000, it may make sense to keep rolling your money faster, to go and make more money, to go and build the nest egg before going out and lending. In some processes to do that is be the lender, be the borrow from somebody else and go and do a deal, go and do a flip, get that capital. The average flip is $50,000 profit. A flip that's done really poorly is 25,000, and a flip that totally fails, you lost money or you didn't make money on. Just don't sell, right? Hold it and rent it. And then a flip that does really well could be 100, 150,000, depending on your market, where you're at, what you're doing. So in order to double your money faster, sometimes a flip may be the case to do it. Some of you on the call are looking and saying, okay, like I've got, 50 or 100,000. What should I do? Should I lend this? I want to be very honest and ethical and say, look, if you don't have maybe that 100 or $250,000 mark, maybe lending isn't right yet. Let's get to that 100, that $250,000 where it makes more sense to start lending, to diversify a little bit. Hence care if that makes sense. We understand, like there's a process to wealth development. We want to never work again, which means we've got to build up the nest egg to the point where we could lend all of it and make good income. Let's say the 100,000 is a target. We'll say 120,000 is a target. Well, at 12%, $1 million will bring you 120,000 a year. Hands can if you can live on 120 a year. Awesome. Excellent. Very good. So then getting to that million may be the goal. Or some of you could be happy with 60,000 a year. If you're living that minimalist lifestyle, if you're living we call it FIRE, financially independent, retire early. If you're living, free like FIRE, maybe 30,000 is enough to get by. So maybe you could drop it down to living in that ballpark of $250,000 at 12%. Hands care if that makes sense too. It really depends on your lifestyle, how much you want. Okay. So very, very personal. That's why we're not putting it in the chat right now. Write it down on a piece of paper. What is the number that you currently live off of right now, and what number you think would be a good retirement number? And then hit that number with the number 5. Hit that with 5. Right? That whatever number you want to live off of, 5x that. That'll give you the amount of money that you should be saving in order to live off it. I'm sorry, not 5, 12. Did I hit that right? If you want to make 30, $250,000, 5, yeah, 7, 8, yeah, hit it with 12. Sorry. Everybody else set with that? Excellent. Life gives you a couple of options. First, you got money, lend or maximize money. 2, time. If you've got too much time, go and build something that will make you more money. If you've got money, buy and lend. If you don't have money, you got time, go and build and borrow. Hands to the camera if you commit to getting to your target, the number you put on the piece of paper in front of you. If you're looking to make 120,000 a year, it's $1 million at 12%. If you're looking to make 60,000 a year, that was $500,000, 12%. If you're looking to make $250,000 a year, that's $30,000 at 12%. I'm sorry, I did that backwards. 30,000 a year is $250,000 at 12. a year is $500,000 at 12, and the 120,000 a year is $1 million at 12. If you want to make the quarter milli a year, it's just $2 million. If you already got $1 million, just roll it again. Hence, Karen, if you recognize we can do this, it will take a system, it will take a process, but it's possible. And you can do deals of that size. In fact, one of the deals that Ron and I did, I talk about it a lot because it's my favorite deal. The condos we bought, those condos we bought at a quarter of their value. Turns out 2 years later, we bought them at a fifth of their value. So we paid $35,000 a condo. Those condos are worth about $140,000. We just got them reappraised. So we bought a phenomenal deal. And on the day of closing, it was a $1.5 million profit. So it is possible to do a deal of that size. It's possible for you to take the money you have right now and roll it up to that larger deal. But you have to be intelligent. It won't be every deal that comes across your table. It will be the right deal. You've got to know what it looks like. You got to know the equity you're looking for. And last year, we bought the same amount of units. We spent the same amount of money. Oh, actually, we spent a little more money to buy the same amount of units. But it wasn't all done in one deal. But our goal was there. We did it across a bunch of deals. Hence, Karen, if you recognize, as long as you have your goal, you can break it apart into little pieces. Awesome. So I have a moment where occasionally I'll bring on people who are either looking to lend or people who are looking to borrow. So I want to open up to the call. Is there anybody who's got a deal they're working on that they're looking for cash, or anybody who's got a deal they're looking for? Are they looking for a lender? And what kind of lender, what kind of terms are you looking to create for yourselves? We'll make this like a live networking event where you can share some information on a deal. We'll stay in line with the SEC here. So if you're looking to lend out money, just be very clear. Hey, this is what I'm willing to charge for money. And if you're looking to borrow money, give us the numbers on the deal and how much you're looking for. And if there's a lender in the room who'd be interested, obviously we'll just partner up if it works. I know just about everybody on the call here, except for Jeremy. Jeremy's new. Let's give Jeremy a round of applause. So let's open up. Lenders or borrowers, what do you got? And you can have fun with this. You can say, let's just pretend, right?
My mentor has a deal.
Is that Craig?
Kind of working. Yeah. I've been kind of
Awesome.
working for free for him lately. So he has 28 units under contract in Rumford, Maine. It's a quick in and out in 6 months. He's looking to pay 10% interest with a minimum loan amount of $30K. We already have up to 150. We just need an additional 150. It's a total of 14 buildings, mixtures of 1s, 2s, 3s, and 4s, all currently occupied by a tired landlord. They need some work, some kind of turnover, increase in rents, but he's just looking for the additional 150K. So
and what were the terms? He said 6 months and how much interest?
10%.
10%, 6 months. And is there second position on this? It sounds like he's collecting over a bunch of people. Do you know what?
Yes, he's collecting over, I think there's 3 investors so far.
Okay, so is he offering a second position to bring in the extra 150?
I believe so, yes.
All right. So that hands to the camera if you know that this is a good opportunity for an investor who would be okay with 10% interest. Yeah, if that's a investor's qualifications, if that's what they're looking for. So Craig, you want to drop your information in the chat if somebody's interested in learning more about that deal and maybe contacting your mentor? That'd be a good opportunity for somebody who likes a deal like that.
Absolutely.
Awesome. Let's give Craig a round of applause.
Sure.
It's not always easy to share the things we've got, but that's how opportunities are formed. That's not even his deal. It's his mentor's deal. So that's huge. That's awesome to be helping people out and sharing other people's opportunities. What else? What else do we have?
Hey, Gualter.
Katrina, what's up?
Hey, actually, I'm looking for accredited investors. Need about $2 million on a South Carolina deal. So I'm looking for soft commits. Anybody who's interested, it's a 5-year project, there's A and B equity positions. So anybody who is interested, the minimum is, I think the minimum is, hold on, it's either 50 or 100.
That's pretty standard. I want to keep us safe from the SEC, but if you could tell us a little bit about the deal. Maybe don't talk about what the returns would be, but tell us a little bit about the structure of the deal.
It's a 506c, so I can talk to the world about
Oh,
it.
cool.
Just so long as they're accredited. That's all I'm looking for investors.
So because this is live streaming on Facebook, we don't know if the people listening would be accredited. So we have to be very careful. So let's not talk about the returns, but we can talk about how many units are in the building, maybe what the acquisition price is, and what the disposition opportunity is.
A 350 unit, 3-story garden apartment community, Charleston, South Carolina. So
Excellent.
yeah.
And do you know what the average rent is out there?
No, I don't. I'm sorry. No, I don't, off the top of my head. Sorry about that.
No, it's all right. So that may be an interesting opportunity. What is the easiest way somebody could get in touch with you if they wanted to have a conversation with you one-on-one?
They can text me at 702-907-4175.
Excellent. Excellent. If you want to do what Craig just did, just drop that information in the chat as well.
Okay.
Awesome.
Thanks.
You're very welcome. And it's a game if you think it's cool that on Be the Bank, we're not only learning the process of lending, we're also maybe getting some opportunities. I think that's cool. And I like that it's community members. You know, I love seeing that you guys are out there hustling, you're working, putting deals together. In fact, today, Kim texted me and told me that she's a part of, I think, 2 or 3 deals within the community. It's fantastic. Kim, you want to talk about that a little bit?
Hi, everybody. Happy Friday. I actually negotiated for one of our community members this morning, and with a couple of different lenders, and we sealed a deal for him and for another partner. And negotiating with the lenders, you always have to remember that everything in real estate is always negotiable as well. So if you have a couple of lenders, and our community colleague was basically going on kind of my credit with the lenders and my knowledge of the deals, with the background that I've had with investing in construction and real estate over a bunch of years, and seasoned with, just the verbiage and how to speak with investors. And this is what we learn in the mentorship as well. So it gives you a really good opportunity to practice your elevator pitch on all of these calls and sharpen your skills along with your pencils. But it was pretty interesting. Yesterday, I spoke to the same investor, and he really had no interest in this deal. And so we spoke to another investor this morning and asked if his rates were negotiable. He was 14% and 3 points, which for me is, oh my goodness gracious, that's a lot of money. But it was a first-time investor, first project, high-risk project, 3 dwellings on 1 piece of property. 2 are rent rolling. It's 2 duplexes and a 4-plex. 2 are rent rolling currently. The 4-plex and the duplex have to be renovated and rented. And it's on an acre, or just about an acre of property. So it's a beautiful piece of property, flat. It's in Connecticut. And we found out today that we're like 0.10, which is like a sliver of land short to be able to separately deed them all. So we need to rezone the property, which is not a big deal. And my suggestion to the owner of the project was to to renovate the duplex that's existing, get it rezoned, and sell the duplex, because now is a good time to sell units like that with the markets, and take, basically pay for this project, sell the two units, pre-sell them, so that we can get deposits in hand and understand what the interiors and designs and stuff are going to look like, and then turn around and sell them, take that equity, take the cash, keep it cash strong, help finance the renovation of the fourplex. And we're thinking that we have to do wells independently on each one, or do a surety bond for water coming in from the town. So there's a lot of moving factors, but until you really get into these deals and learn the logistics and how to talk to lenders about these things, this particular lender this morning was not willing to negotiate. It was a new deal, high risk for right now, but it's going to be a short-term loan, and we're hoping to refinance within 6 months. While the economic status is pretty good with banks still. So I think that was really well received, was to sell the duplex and take the cash and help it cash flow, so that he can do something bigger along with renovate this property and keep the rent rolls going. So it's important just to kind of know how to leverage. And then I was getting my phone fixed, and when I got my phone finally working again, I got a call from this particular lender from yesterday saying, I want to renegotiate, I'm in, blah, blah, blah. So, it's kind of like a deal. You walk away from deals all the time and you say, okay, I'm not willing to pay that. And you walk away and say, look, if you decide to change your mind, give me a call. And usually about 85% of the time, I find that people are knocking at your door and willing to renegotiate their terms. So, don't give up out there, and don't get analysis paralysis, and reach out to those of us that are in the community that have been doing this for a while and understand the logistics and lending and the money aspects of it and the construction aspects of it. And reach out to us, and we're always willing to have a conversation.
Let's give Kim Harvey a round of applause. No matter where you're at in the game, there is somebody who has done it before. Reach out, feel comfortable with what we're doing. I know money can be a hot topic for people, especially if you were raised not talking about money with your family. But in this community, it's just a conversation. It's just energy. It's just something for us to talk about. The idea is, do the great things with your money. Do good things with your money. Grow the money. The money is happiest when it's growing. Money is happiest when it's put to work, when it has an opportunity. And money can expand, and it likes to. So I've got to jump off. My brother has a situation in one of his buildings, and he is asking for some brotherly attention right now. So I love each one of you. Thank you for hanging out with us today. If you have any questions, send them in Facebook, and I will see you tomorrow at the 52 Weeks of Wealth. Cheers to your success. Night, guys.